mortgages, explaining them in depth, what's important and what you need to understand, and how it can help you as a real estate investor. So everyone's Dave Hathaway, owner-operator of Hathaway Property Management. We self-manage our own 50-unit portfolio with efficient systems and processes to help us easily scale, reduce stress, and be more hands-off. I want to do a little bit longer format video on, so first off, your mortgage. Mortgage is how much a bank or a lender lends you. And let's say it's $300,000, that ends up being your mortgage balance to begin with. And if they're gonna loan you $300,000, your mortgage balance is $300,000. You also have a monthly payment, is how much you're paying that lender or that bank each month. It's usually the same over time. Every now and then it gets adjusted at the end of the year if your property taxes go up, if your insurance taxes go up, but normally it's going to stay relatively the same payment. So with that monthly payment, it's broken down into 3 different things. Your first being principal. The principal is the amount of money that you pay down your outstanding mortgage balance. So if you have $100 of principal to begin with that you're paying in your monthly statement, then your mortgage balance will go down by $100 each month. This will grow over time, and once you get towards the end of your loan, it should be the majority of the payment. But to start off with, because your loan balance is so big, it's going to be the smaller portion of your payment. That brings us to the next thing, which is interest. Interest is the amount of money that the lender makes for lending you that money. At the start of a loan, it's going to be the majority of the payment because your loan balance is the entire thing. Then as you pay down your principal, that loan balance is going to get less and less. That means the interest is going to get less and less, and the principal is going to grow. So I hope you see there's an inverse opposite relationship there. Next, there's escrow. So, and again, this is part of your monthly payment, and your escrow is actually broken down usually into 2 different things, and that is going to be property taxes and property insurance. So escrow is when the lender actually collects money from you, and at the end of the year, they will pay your property taxes and property insurance. They do this to ensure that they get paid, that you don't, as a real estate investor, keep the money or do something else, spend it on a rehab somewhere else. So it ensures to them that that stuff gets paid so they're protected. So those are the main parts of the mortgage or monthly statement. The main pieces that are important are your interest, and your escrow is tax deductible. So it is a benefit for you as an investor. At the end of the year, the bank will issue you a 1098. It will say how much money that you paid in interest. It will say how much money that you paid in property taxes and insurance. And you get to write that against your rental income. So if you paid $10,000, for instance, in interest and taxes and property insurance, and you made $15,000 in rent, then in essence, you only made $5,000 because the interest and the escrow gets deducted from your gain. The last 2 things you should know in regards to mortgage is amortization tables, and that just shows you the relationship between principal and interest over the full term of your loan. You'll usually see a schedule that looks like this, and as you can see, principal is small at the start, interest is large at the start of the loan, and then over time, if it's a 30-year loan, you'll have 360 payments, 1 for each month, and you'll see at the very end here, your principal is large and your interest is small, like we talked about at the start. The last term to know is PMI, which is private mortgage insurance. If you are a higher risk, or you are at higher risk of default, i.e. you're putting a very little amount down, like 1%, 3% down, the bank might force you to purchase PMI. In essence, they are making you purchase insurance that covers them or pays them in case you default. Thanks for watching the video. If you found this content valuable, we'd really appreciate it and help us out if you'd like and subscribe to the video. We're here to share education on real estate, investing, and wealth creation. And we'll see you on the next episode.